Hi, I'm Tom Mihawk, and welcome back to segment 2 in this chapter called Credit and Borrowing. This is my online personal finance course, and I'm glad to have you back. We're talking about credit, borrowing, and debt. And is debt a good thing? And should we avoid it? Should we embrace it? How should we handle it? Let's talk about credit cards. Credit. 8 of 10 U.S. households have one or more credit cards. 1/3 are convenience users and pay off their balances in full every month. It's a good thing. They don't experience any interest charges, right? They pay it off before the end of the typically 30-day free interest period. 2/3 borrowers carry balances forward and pay finance charges. Some use cards for cash advances, which is very expensive. They pay fees and interest rates usually higher than the rate for purchases. And because often cards are linked with businesses, offering points or rebates on products or services. Some people use them for these, points or rebates. You're buying a suit and they say, hey, if you get a credit card from our store, we'll give you 15% off on your suit purchase or something like that, clothing purchase. And the key is they want you to keep the card and keep using it. And what you'd like to do is get the discount on the suit or the clothing purchase and then get rid of the card because you don't want to necessarily have too many credit cards. They're also smart cards. They're embedded with computer chips, providing additional information. You know what they look like, right? Smart cards have those computer chips on them, right? Look like this with the chip. And can have additional information, maybe driver's license information. I don't know that they're used this way, but maybe one day when in a health environment, health services, medical environment, it would have medical information about you. And debit cards. Everyone has a debit card these days. Debit cards electronically subtract purchases directly from your account. There's no delay. It's good for the vendor. They get paid right away. It's not so good for you because you don't earn any interest once that purchase has been made. It's immediately goes right to your account. Also, smart cards. Sometimes they have embedded computer chips providing additional information. These cards are what I just spoke about a moment ago. That was relatively new, that embedded chip. Debit cards linked to your account directly, electronically subtracts the purchase directly. And stored value cards resemble credit cards used in place of gift certificates. And don't forget to use the card. Call the number on the back of your card if you forget. I've done this. I've found the card in my wallet, called the card number, realizing that I hadn't used it in a while and the balance was listed as 0 and was able to recharge the account. I just realized that for some reason there's a mistake. Sorry about that. The smart and the debit card was on the previous slide. Sorry about that. But stored value cards were not. And that's key. Use them when you get them. They're often given as gifts. If you don't use them quickly enough, you forget them, call the number on the back of the card, and you can also often have it recharged for the balance that remains. Some smart credit protection practices. Sign up your new cards, sign your name on the back of the card when they arrive. Keep cards in a known place under your watch, be aware of where they are. Use caution when providing your card number by phone or online. These days we do that all the time, right? We provide our number, we give our credit card number. Be cautious who you provide it to and keep your cards under your watch. Keep receipts, check against and review your monthly statements to make sure there haven't been any charges that weren't yours. And contact the issuer quickly if your card is lost, stolen, if the card's used in an identity theft, or if there's a billing error. Now, let's talk about, can I afford credit? Can I pay all my required expenses and afford the additional expense of a loan? It's a question you should ask yourself. Am I willing to give something up in order to make the payment on this new loan or this new credit card? One way to look at it would be to say to take your debt payments, not including your home mortgage, that's considered a long-term liability, but take your debt payments and divide by your after-tax monthly income. This is like your take-home pay, right? And this ratio is recommended to be less than 20%. It may vary. There may be times in your life when it's more, but this is a good rule of thumb to keep a manageable amount of debt payments relative to your income. And another way to look at it is to say your total liabilities, again, not including your home mortgage payment, divided by your net worth is recommended to be less than 1. You want to have liabilities that are less than your total net worth. I mentioned credit scores in the first segment in this chapter, and it's the kind of thing you don't want to live your life to have a high credit score. You don't want to get up in the morning and wonder what you can be doing to raise your credit score. But your credit score comes back to get you all the time. It has to do with, often companies review your credit score when you apply for a job. Insurance companies review your credit score when you apply for insurance. It's viewed as living a responsible life, right? You want to be aware of your credit behavior and know your credit score. Now, I list here that, there's a public summary. There are 3 companies, Experian, TransUnion, and Equifax, and probably others, but these are the 3 majors. And their methodology determines your credit score. It doesn't mean that that's 100% reflective of your credit and financial behavior, but it's the way the world sees it. They see it through these agencies. To have a good credit score, pay your bills on time, use credit responsibly, and in line with your overall financial situation. You can certainly have more debt if you have more net worth, or your earning is higher. But if your net worth is low or your earnings are low, keep low debt. Be a responsible financial consumer. Calculating credit scores can be an arcane art. In my undergrad personal finance courses, students frequently choose calculating credit scores as a presentation topic. And many are, it's a very dry topic. I've had some that made it really interesting, which is good for them. But it can be an arcane art. There are odd things. Some parts are logical about the way credit scores are calculated, and others are counterintuitive. Like, you would think if you had too many credit cards, 5 for example, and you would think that paying them all off would be a good thing for your credit score. Well, not always. Often having credit, but having low balances, meaning that you're managing the credit, is better for your credit score than having no credit at all. And so while you would like to get rid of maybe all your credit cards if you were able, keeping some but having low balances may be better. So some of these things are counterintuitive. Learn the composition of credit scores. How do these agencies calculate your credit scores? And be alert as you use your credit. Employ good financial behavior and good credit behavior. Pay your bills on time, use your credit responsibly. One thing that helps me a great deal is that I've had credit for over 30 years, over 35 years. And so have I been late sometime in my life? Yeah, I made mistakes, went on vacation, had a mix-up, bill didn't end up in my inbox for payment. That was, my mistake. But I didn't let it go very long. And there were few of those in over 35 years, as I said. So I've been able to build a very good credit history, which is good. And for young people, that's tough. Building a credit history is difficult. That's why having some credit, but paying it off regularly and having it paid down, that's why it was recommended to me, as I said in the first segment of this chapter, to get an unsecured line of credit. Use it, pay it off. Use it, pay it off to build credit history and a relationship at a bank. You have legal rights, and you should know this. Regarding who has access to your credit score, if you're denied credit, you have legal rights. There are requirements for the deletion of obsolete and the correction of inaccurate information. And you should know that you should follow up on these if you have an issue. You have legal requirements too, and there's a specified process if you have to report a credit error or if there's a dispute. And you can look this up online, but the point is you should know that there are lots of laws that protect your rights, but that also require you to do certain things if you dispute credit, a credit decision or a charge to an account of yours. With a consumer credit complaint, first try to solve the problem directly with the creditor. If you have an issue with a vendor, go talk to them directly at first. And if that doesn't work, take more formal steps. Adverse information about your credit can be reported for 7 years, and a bankruptcy can be reported for 10. And we'll talk about bankruptcies in a future chapter. Identity theft has become increasingly common. If your identity is stolen, contact the 3 major credit agencies. Remember, they were Experian, TransUnion, and Equifax. and advise them to call you for permission before opening any new accounts in your name. Contact creditors to check accounts that have been tampered with or opened fraudulently. These days of making purchases online, by phone, using apps on your phone, right? These days it makes it easy for people to steal your identity. And so be very cautious about that. I can remember once I was in, this is not identical, but similar. I was in Grand Central Station, and this is back in the days when you had a calling card that would enable you to make discount long distance calls. All companies had them, and I was making some calls using which also doesn't exist today, which is from a payphone. And I went to my meeting later. I was in an attorney's office in New York City, and I got a knock on the door, and they said, "Mr. Mihak, come on out. We want to let you know we got a call. Someone's using your long distance card and making calls to, I forget, South America. Have you been doing that? No. Well, you better contact them and be cautious." Well, what happened was someone was standing on the second level of Grand Central Station where, in New York City, where now the Apple Store is, for example, I think with binoculars, and they were able to read my card numbers or watch me type in my card numbers, and they used those. So it's easy. The point is, even though not exactly identity theft, it's easy to take this information. So be very cautious. So let's summarize credit and borrowing and just sort of debt in general. Spend less than you earn. Plan and spend a manageable portion of your earnings and your worth. I mentioned the 50-30-20 plan. There are other ways to do it. Now, there are clearly times, and I have more time to discuss this when we get into it in more detail in my face-to-face teaching. But the point is, there are times when this is hard. When kids go to college, if you have two kids and they both go to college. I always joke that, I used to have brown hair, and this is 8 straight years of private school college. It's not exactly true. It would have turned gray anyway, I'm sure, but it makes for a good story, right? And it's good for teaching. But the point is, you may not always do this. You may start a business. You may change jobs. You may move across country to follow a spouse or a soon-to-be spouse and have to get a new job and be out of work for a little while before you're able to get started again. So sometimes you spend more than you earn. Sometimes you borrow more than you'd like, but be aware. Try to borrow only when necessary and for valuable purposes. Sometimes people call this good debt versus bad debt. Understand its cost and be alert about repayment and repayment strategies. Know how your interest charges are calculated and be aware of what your debt is so you can pay it down and hopefully pay it down quickly. Be aware of the risks of excess debt and manage them. Know that extraneous events, medical issues, loss of a job, business reversal, in the time that I'm recording this now, the COVID virus that's impacted all of us in our business lives. Know that these things can impact you. Your credit score is important. Be aware of it. Manage your credit and financial life to optimize your score. It impacts your ability to get insurance, get a new job, get a good rate on a mortgage. All these things are impacted by your credit score. Get a good rate on an auto loan. You have legal rights and responsibilities with credit and your credit score. Be aware and rely on them when necessary. And be alert for identity theft and handle transactions and personal information with caution. Be cautious. This has been the chapter on credit and borrowing. Talked a little bit about debt. Also, I'm Tom Mihak. Thanks for watching this second segment of this chapter and for watching my personal finance course. You can find me at tommihak.com, my YouTube channel, at Twitter and Instagram at Resume Optimization. I have a new book available at Amazon called Optimize Your Resume. Please look for it. Thanks very much. I'll see you in the next chapter.